Hi, and welcome back. As you can see, my portfolio has not performed very well in this past week. If we go ahead and look at the 1 week chart, we can see that it took a really big nosedive here. So we peaked up here at about $2,700 and slid all the way back down. So in this video, we'll talk about what caused that and what I think can reverse that moving forward. So again, on the week, not very well. SPHD, my largest share in my portfolio, didn't perform extremely well this week, but it moves just right about along with the market. So as we can see on the month, not bad at all. 3 months, we're making a recovery. So I am up just under 2% on that all time. And next week, I'm expecting a dividend of $1.22 or 15.2 cents per share. So as you can see, pending right there. The more that I'm researching and the more that I'm kind of wary about the future of the stock market, at least in the short term, I think this is a really safe bet because of the high dividend, and it's basically going to follow the S&P 500's movement. Now, VTI is another one. It's another index fund. I've talked about it before. Difference is that is a total stock market index fund as opposed to SPHD, which is an S&P 500 index fund. So Vivint Solar we'll go ahead and talk about because it's not performing well at all. I talked about in the last video how I'm thinking that their upcoming earnings call on the 5th of November should change things if they're able to get their earnings turned around. Past month down 14%, horrible. 3 months is really where we're starting to see things not looking well, down almost 18%. So I've shown this trend a couple other times. We see a really large upward trend, and we're going back downward right now. But I'm confident that as they are able to get their revenues to increase and their costs to decrease, I think they'll be more profitable. Last week I talked about Coca-Cola and why I think that it's going to continue to kind of outpace expectations. So I listened to a little bit of the earnings call, researched that, and Coca-Cola did meet their earnings expectations. So here it's saying 56 cents per share, but the industry basically had estimated, I think, 51 cents per share, so a little bit higher on that. The pessimism with this stock was that when they looked a little bit deeper, Coca-Cola had said that they're expecting decreasing global outlook, which is something that they've been saying for the past year. At the same time, they're kind of tidying up and doing a better job of increasing revenue and increasing basically their hold on the entire world as they're moving more globally. So we'll go ahead and show on the week. Down on the week, which not a huge deal. I'm down 50 cents on that all time, but again, a very strong dividend stock and something that I'm going to stick with and hold on to it for the future. Pfizer has continued to underperform, and it's not looking well. The interesting one here is Charles Schwab. So I've done some research, and basically as Robinhood has kind of shaken up the way that brokerages and different people look at investing as a whole, companies like Charles Schwab have struggled. And if we look over the past 3 months, they did really struggle. They had this downward swing and then back up and dropped straight down. But they're starting to make this recovery. And basically what happened is Charles Schwab has decided that they, as a brokerage, are now going to charge zero fees, just like Robinhood. All of these other brokerages have followed suit, Fidelity being another one. But the research that I've read says that Charles Schwab is the most equipped and ready for this change. And they feel that they can still succeed basically by getting interest through other various forms of money that are flowing through the company, and I think that it's a stock to hold on to. I'm still down $5 all time on that one, but as we can see, just a couple weeks ago, they were down to $35 a share, and it's all the way back up to about $41. So not great. Still down on those, but at the same time, they are making that back up and are looking at an upward trend looking forward. Let's see. I did pick up another share of Corning last week, so they are down a little bit, but as you can see, I'm up about 2.5% here in the short term. I talked about it last week. Decently high dividend, a company that's very consistent in their earnings, a company that I think can be very successful moving forward. And so something that I'm looking at continuing to buy over the next year or so. So 3 months, still not looking great. 5 years is where it gets interesting because we saw this large upward trend, and they're a little bit stagnant right now. Haven't seen a ton of movement in the last year or two, but not a deal breaker for me at all. And again, as I mentioned in this video introduction, Bitcoin is really what's bitten me in the butt the worst, and there's not a whole lot that I can do about that. I'm fairly confident in the idea that as Bitcoin halves coming up in May, the price should skyrocket. It has the first two halvings. Halvings occur every 4 years. With Bitcoin, that's the way it's set up. And I'm confident that that's something that's going to push the price higher than it's ever been before. I've read estimates that think within the next 18 months, somewhere around there, Bitcoin could top somewhere around $55,000. I don't know a ton about that, but I do know that there's a lot of room for upward growth in Bitcoin itself. So I'll go ahead and show over the last 3 months how much I've struggled. So down $202 over the last 3 months. And here all time, we're down about $153. So not good at all. But again, I'm confident that in the long run, I've got my dividends set up to make money. I've got my dividends set up to be more consistent. And again, SPHD is a stock that I'm confident in, or excuse me, a holding that I'm confident in, because they pay those dividends monthly. And for me, it's all about consistency right now and trying to grow the portfolio. So being down $153 doesn't look good at all, but I'm not overly concerned about it, to say the least. So we'll go ahead and take a look at Bitcoin right here. As we can see, my equity right here, $378, down a ton, down $104 on that all time. So atrocious. We can go ahead and say atrocious, down 27%. But a lot of that has to do with the past 3 months, down 20%. And here it peaked right back up here about 12. And if we look in the year, it crossed over 13,000 here. So not looking great if you're looking at the 1 year trend. But if we go ahead and take a look at the 5 year trend, we've seen this before. Bitcoin's going to go up, it's going to go down, and it's going to go back up again. Something that I've understood I need to be patient with it because it's not going to happen overnight. It's not something that I can count on happening overnight. So I'm content with that, as difficult as that might be. So the last thing that I want to touch on this week is an interesting one, because I've talked about it in the past how I don't trust Tesla, and it's a company that I don't necessarily think is a good investment for most people. Now, their earnings call was today, and they eviscerated expectations. So they were projecting, I believe, a loss. Yeah, here we go. 42 cents per share loss is what they were projecting. But their actual earnings showed $1.86 per share. And to have that large a jump is incredible. I had read a little bit that basically this was due to decreasing costs and increasing the amount of sales that they've done. I've got an article pulled up that we'll take a look at in a little bit. But the big thing of note here is they're up 20%. So if we look at, say, the last year, we can see that they have struggled a ton. They're still down on the year. But today's jump of almost 17% is enormous. I'm still not confident in this 5 year stretch. They're up 30%. But the reason I'm not confident is because if we take another look at their earnings, they're all over the place. They've been up here before. As we can see, Q3 2018, they had enormous sales. And they were extremely successful, but their sales are all over the place. Their earnings are all over the place, and we really don't know what they're capable of in the long term. And I just think that when you're talking about a company that's losing money, potentially in a quarter, and then turning around and making money the next quarter, there's just not a lot of guarantees or really confidence in a company like that, at least the way that I look at it. Now, this article talks exactly about this. The price target that analysts have on the Tesla stock skyrocketed today because of those gains. And as you can see, the $300 price level that they're trying to break, that'll be the first time since March, which that graph reaffirms. And here they say the officials attributed the swing to profitability and earnings to a reduction in costs. A letter to shareholders, the company said operating expenses are at their lowest level since the company started producing the Model 3. So several Wall Street analysts improved their outlook on the company. They said they've raised their price target to $270, $220. Um, but as we can see, the price is over that, so they're not too confident that Tesla is a company to buy right now, even though they've been successful. Um, and again, here they talk about they've been able to lower their costs and increase their production. But as I've stated before, I just don't know that they're going to be a consistent enough company that you can trust in the long run, or really just be confident in the long run. So that's kind of my take on that. I'll definitely be taking a closer look at it in the next year or so to see if anything is changing on that front, or if my mind changes at all. So thank you, and I'll be back next week.